student chapter UPS, CSI, and the Bullsmart online webinar. And we take pride in welcoming Karthik, who is also the founder of Novice, and he is our speaker for the day. But before beginning with the session, I would request everyone to please turn off your cameras, and if you wish to, then you can turn on as well, and keep your mics mute on all times. And so also we would like all the students to please download our Bullsmart app from the Play Store and use the hashtag UPES and let us know about the session that we have today at the end of the session. So I'll give you guys 30 seconds to download the app and just give us a heads up. So once you are done with downloading the apps, please you can raise your hands and show us that you have downloaded, so that we can move ahead with the session. The app is Bullsmart from and you can get it on the Android Play Store. Is anyone facing any issues in downloading the app? Do let us know on the chat box if you are unable to find the app or having any concerns. Okay, so should we move ahead, Karthik?
Yes, please.
Okay. So let's start with the introduction of the event. So as we all know, guys, that investment is a tricky term, and most of us are aware of what investments are, but still struggle to start investing because we have so many queries and doubts. But that's fine. That's why we are all gathered here today to understand more in detail about how to start your investments and how to make your money grow. So let me introduce our speaker for the day, Karthik, who is the co-founder of Novice and has been working in the financial service industry for more than 17 years now. He has been working with more than 1.5 lakh professionals to equip them with the skill set and knowledge that is required in their professional journey. Karthik is an accredited trainer with the National Institute of Securities Market. He has trained for organizations like Aditya Birla, Sun Life Mutual Funds, Canara Bank, HDFC Bank Mutual Funds, ICICI Bank Mutual Funds, etc. So before I hand over the stage to Karthik, I would like everyone to know that the topic for the day is Introduction to Personal Finance. And I would request all the students to be active during the session, and you can answer any question that the speaker has, and you can also keep the session interactive. Okay, so over to you, Karthik. Let's start with the session.
Thank you so much, Vidhi, for the lovely introduction. So, hey, hi, good afternoon, guys. Good afternoon, everyone, once again. It's a lovely afternoon. It's amazing to meet all of you. I know it's a digital meet, but nevertheless, I think it's a great opportunity. Like Vidhi mentioned, the overall intention of this particular program is to give you an introduction into what we call it as personal financial planning, right? I mean, personal finances, why we should bring in some kind of discipline. And then as a student, you might be thinking, isn't it a little too early? Why should we know now? I think we will answer all those questions. But before I begin, I want to ask this one question to all of you. What is that one takeaway you're looking at from this program? If you can put it on chat, chat, or you can probably unmute yourself and then give me an answer. What is that one takeaway you're looking at from this program? So that would help me to, structure the program accordingly. Can we see some responses, please? It could be on chat, or you can unmute yourself and then give me an answer. Either of the two is fine. Anyone?
So, Karthik, I would say something here if you allow me.
Of
That
course, please.
while we were collecting the responses and the registrations of the students from UPS, so the most query and the most prominent query that we received was that since currently we are like they will just begin their investment journey. So how and even that's a personal question also for me, because I also began when I began my journey, earning journey. So my first thing was that how and how to manage my funds, like how much to save, how much to invest, where to invest, and from where to begin, because in the early stages we do not have no any knowledge about the stock broking and all. So the first initial steps, I guess, even these were the questions that people have posted in our registration links that we have received from students. So
I'll
that's
cover
where we can
accordingly.
start.
That makes sense. Yeah, sure. So, guys, I think when it comes to the matter of money management, right? I think all of us we know that we have a big world. We want to work very hard. We want to make lots of money. I'm sure that's the reason, one of the reason why you guys are doing MBA as well, right? Now, let me just probably share a very interesting story. I'm sure all of you know this prolific boxer, Mike Tyson, right? I'm sure all of you would have heard of him. He was one of the probably the best boxer the world has seen. There's an interesting story behind his career. If you see during his career, right? I mean, he made almost about 300 plus million dollars during his career as a boxer. If say one of us would say that I have made 300 odd million dollars, I think we would definitely call it as a success, right? I mean, we have probably created the mark in life and so on. But look at the irony of life. By the time he retired, or like a couple of years into retirement, he was personally bankrupt. And then he did not have money to probably pay for his children's, like let's say education or all the commitments, whatever he had. So from 300 million to going personally bankrupt, look at the kind of roller coaster what he has seen. And likewise, we've seen many such examples where people have made tons of money, but bad management, they're in, like let's say bigger trouble. So all it boils down to then this question, money management becomes very, very essential for everybody, right? I mean, it doesn't matter what specialization we come from or what is your background and so on. I personally think this should be one of the life skills. So then, when we talk about money management, or even for that matter, personal finance and personal financial management, we always ask this fundamental question: why should we invest? Okay, by investing the money, what problem you think we are trying to solve? Right? I mean, sometimes it's always good to answer this fundamental question, right? I mean, why should we really, and like let's say invest or save? I'm sure all of you have your dreams and aspirations in life, isn't it? I mean, somebody might say, I want to buy a nice big house for myself. I want to buy a big car, having my own startup, right? I mean, going for a nice vacation. And these days, a very interesting trend, what I get to see in many youngsters is, I want to retire early and I want to retire rich. So I think this is where probably you could start from. Okay, let me probably make all the session, like I say, cover the entire session with 5 thumb rules. The first and the most important thumb rule being, set your milestones. What are those dreams and aspirations you want to achieve? Prepare that list, write it down. Why writing down is important? There is a very interesting research which concludes that people who've written their goals, the chances or the probability of them achieving their goals almost go up by about 30 odd percent, right? So that means it makes sense to write it down. But it is not just enough to write down this list, like, okay, I want to travel, I want to retire rich. You need to define it. When you say you want to start something on your own, decide by when do you want to start it. Like you can say in next 5 years, And then you also need to decide how much money would you need for your startup. Okay, so when you define each of these dreams and aspirations with time and money is what we call them as financial goals, right? So that's the first thumb rule. That's where you start from. And then you start working backwards. Okay, now, like somebody might say, I want to retire by the age of 45 and I need to have 20 crores. Now you have a goal in mind. Then you start working backwards. How am I going to achieve these goals? Right? So how are we going to achieve these goals? Like generally for all the goals or the milestones, what we have discussed, for most of them, there are banks who are more than happy to lend you money, right? I mean, there is home loan, car loan, personal loan, you name it. There are multiple types of loans which are available. But two perspective to this: one, you need to put in down payment from your pocket, and then there is a goal for what we call it as a retirement. That's probably the only goal where there is no bank loan available. You have to fund it yourself. So where are you going to get the money from for the down payment or for your retirement? So that should ideally come from your savings. So how much should you save, right? I mean, there is a broader thumb rule what we talk about. Okay, we call it as 50-30-20 thumb rule. So what do you mean by that? Of the 100% income what you receive, okay, what ideally you should aim to save is minimum 20%. Like let's say you get into a job where you start withdrawing about a lakh a month, then minimum what you should aim to save is 20,000 rupees. Okay, 20%. Ideally save the money first and then spend later. Trust me, when probably I heard this for the first time, I felt like it's a gyan. Okay, it's easy, we all know it. But trust me, probably simplest of the things are the ones which are most difficult to follow. It's like saying if somebody told you that you must exercise at least 45 minutes to 1 hour every day. It's easy, right? I mean, it's very easy to hear, but it's very difficult to follow. Same is the case with savings. What happens once we start earning, the amount of, like let's say things what is around us, the amount of money what we end up spending would be so much key people struggle to save money, right? So that's the second point. Aim to save minimum 20%, save first and then spend later. Okay, that's the second thumb rule. What is the third thumb rule? Can you just save the money and then leave it as it is? That means leave it in the bank account, or you want to keep it safe, withdraw that money and keep it at home, probably in a nice, nice thick safe deposit locker. I don't think it would make sense. I'm sure all of you are smart enough to understand that if you just save the money and leave it as it is, inflation would take away the purchasing power of your money. Okay, it reduces the overall value of your money over a period of time. So how do you protect your money from inflation? Very simple. That brings to the question that, okay, we essentially need to invest the money. When you invest, the returns generated by the investment will help us in beating the inflation. So guys, let me ask this question to all of you. What are the different investment options available for a common man? Can you please put the list? I mean, according to you, what are the different options? Can you put it on chat? Can I see some responses? What are the different investment options available for a common man? Okay. Saksham is saying crypto. Fantastic. Navneet is saying mutual funds, stocks. That's great. Shubham is saying equity. That's nice. That's great response, guys. Keep it going. I'm sure you guys are smart enough to know what are the other options available. Vinayak is saying gold. Okay, yeah, I think as Indians, we love gold. Probably in terms of retail holding, as Indians, probably we are richest compared to any other countries. Futures and options, sovereign gold bonds. Okay, but you guys are forgetting the some of the traditional options where probably our parents and grandparents invested. Shubham, treasury bills, I agree, but that's not something what like retail investors invested. Okay, that's great, Navneet. Fixed deposits, chit funds. That brings the very important question. Do not invest in any investment option which is not regulated. Right? For example, generally, if you see, chit funds are not regulated, run by smaller communities and so on. Anything which is not regulated is still very risky. Stay away from them. As simple as that. Right? Now, that's great. I mean, we've seen so many options, right? There is fixed deposit, recurring deposit, post office savings schemes. Then there is crypto assets, okay, gold, mutual funds, direct stock, life insurance, national pension scheme, right? Just in the fraction of seconds, we saw the list of so many investment options available in front of us. Yeah. So what's interesting is the moment as an individual we are presented with too many choices, what happens? Definitely it leads to confusion, isn't it? What happens when it leads to confusion? I mean, these are some of the behavioral mistakes what we end up committing, right? Two challenges. One, when you're confused, you might probably postpone the decision making process itself. Okay, let me take some more time, I'll do thorough research and then I'll revisit this. That could be one scenario. Another scenario is you might as well just end up doing what probably your parents have done it, or what your friends or siblings are doing it, right? I mean, we call it as like, let's say something what you end up imitating. So this could be challenges, right? Now, how do we really bring down these complications? I think how do we bring down the challenges of too many options, too many choices, and how do we simplify this whole thing? So what we can do is all the investment options, whatever all of you have listed, we can broadly categorize them into four buckets. In finance jargon, we use the word asset classes, or just in simple terms, we can say that these are the four investment categories. Which are these four simple investment categories? What you see here on the screen. First one being fixed income. What is fixed income? At the time of investing itself, you know how much return you're going to get, right? FD, RD, public provident fund, any bonds, somebody said treasury bills. All these are examples of fixed income. They belong to same family. The second asset class is what we call them as equity. You want to call it as stock, shares, different names, but equity as an asset class, that's the second asset class. Third one is commodity. Remember, when we say commodity, we are talking about gold or silver in general, but probably you could also consider currency and etc. in commodity as a segment. And finally, real estate, residential property, commercial property, or an empty plot of land, anything. These are the only four asset classes which are available for a common man to invest. You must be thinking, then what happened to mutual funds or life insurance plans, national pension scheme? All these are money managers. What do we mean by money managers? They collect money from us. Okay. The money collected will be invested in bonds or equity shares, or maybe they club these two and then create a portfolio for us. Okay. So from 10 to 12 choices, now we have brought down to 4. Don't you think decision making has become a lot more easier compared to the earlier scenario? I'm sure yes, it is, right? So now tell me, what is your favorite choice out of these 4 asset classes? Fixed income, equity, commodity, real estate. What's your favorite choice? Can I see some responses on the chat, please? Out of these 4 asset classes, what we saw, what is your favorite choice? Just give me an answer. I don't think it has any bearing on what is right, what is wrong, and so on. We're not going to judge. Okay, Saksham is saying commodities. We all tend to have our favorites, don't you think? Don't you think so? Somebody might say commodity, somebody might say gold, somebody might say equity. All of us tend to have our favorites. This is one of the biggest emotional mistakes what we end up making, that making the investment options as our favorites. Somebody might say, look, I'm young, I can take risk, let me trade in equity, let me do only futures on options, but FD is boring because I'm young, it's too boring, right? I mean, all these are some of the emotional mistakes what we end up committing. Let me probably explain this concept with a very simple example. Imagine yourself as a soldier. As a soldier, you have 4 weapons with you. You are fighting a battle. Okay? You have a knife, revolver, machine gun, and hand grenade. Out of these 4 weapons, if I asked you, what is your favorite weapon? Somebody might say machine gun, somebody might say hand grenade. Why hand grenade? You throw and then problem is solved. But if the enemy is standing right next to you, would you still throw hand grenade? No, right? You would be harming yourself. What does it, in simple terms, it mean? As a soldier, you can never have, okay, this is my favorite weapon. What you need to understand is every weapon has its own advantages and disadvantages. Based on the right scenario, pick the right weapon. Only then you will survive. Agreed? So that means your decision has to be logical in nature. It cannot be emotional. As simple as that. If we bring down the same learning to these four options also, please do not have favorites, right? You might be biased with saying that your parents might have said that stock market jua hai, paisa mat dalo usme, right? Or somebody might have said gold is great investment option. I mean, whatever it is, everybody tends to have their own emotional experiences with the investment option. Do not have it. What is that you should be doing? It is very important for you to come to a conclusion that every investment option has its own advantages and disadvantages. And based on your, like let's say, goal, or based on your probably end objective, pick the right investment option or pick the right combination. Only then you will achieve your financial goals. Otherwise, you will just be behind your favorites. As simple as that. Okay, so what we'll quickly do is we'll look at these three asset classes, that is fixed income, equity, and commodity. What are the advantages, disadvantages? And then finally, how do we construct the portfolio? That is what we will look at. Is that okay? Simple enough. I hope you all of you are able to follow what has been discussed so far. And I'm assuming it is probably simple enough what we have discussed so far. We have not probably complicated. Okay, great. So we'll start with fixed income. The first option being, when we think of fixed income, probably the most common fixed income option what we can think of is FD, fixed deposits. What are the advantages of investing in FD or FD like products? Simple three. First one, it's very safe. If you put money in a good bank, you can sleep peacefully. Second, the interest offered by FD, they're not subject to market risk. Whatever they commit is what you get. Third, it is very simple for us to understand. Anybody, our parents, grandparents also invested, no rocket science. These are the advantages. What could be the disadvantage? The biggest disadvantage of investing in fixed income is whatever interest you earn, whether low interest or high interest, it doesn't matter. Generally, it doesn't beat inflation. Suppose today you are earning 7% as 1 year FD interest. If you remove income tax and if you adjust it with inflation, probably you would be earning negative returns, right? For a year. If the same thing continues for 10 years, what happens? Every year you tend to lose money and you continue to lose money at the compounded rate. That is one of the biggest disadvantage of fixed income. Right? That's why many young investors would say, no, it's not a great option here. I mean, let's not invest at all. But you need to understand there are certain benefits also attached to fixed income. We should know how to make use of this. So when you guys start earning, okay, the first set of corpus or the investment corpus, what you should build is for your emergency corpus. What if there is a job loss or an income loss? How are you going to manage and how many months can you survive? That means every individual must have an emergency fund. How much? You can start with minimum 3 months of your monthly expenses as an emergency fund. That could be starting point. And second one, not all goals of yours are meant for long term. Maybe like let's say not all goals are meant for long term. Some of them are for short term also, right? Next year you might be planning to buy a nice car for yourself. You're setting aside some money for down payment. Where will you invest money which is required for short term and for emergency? That money should ideally sit only in fixed income. If you think FD is boring, you can always explore debt mutual fund schemes. What are these debt mutual fund schemes? Liquid funds, ultra short duration funds, short duration funds, etc. You can explore these multiple choices and options where you have minimum 3 months of your monthly expenses as an emergency fund. That could be starting point. And second one, the fixed deposit returns. But everybody should ideally have a particular portion of their money set aside in fixed income. As simple as that. Okay, that's the thumb rule with respect to investments. We'll move on to the next asset class, that is equity. Why equity? Very simple answer. Every individual should have some exposure to equity, primarily because, like I said, many of our goals are meant for long term. Say your retirement after 25 years or say 30 years, you need to have 10 crore or 20 crore corpus. You want to buy a house after 10 years. For that, probably you need to have 20, 30 lakhs as down payment from your pocket. You want to start something on your own, right? You might need to have 20, 30 lakhs from your side to put in as a capital. How are you going to build such large corpuses? To build such large corpuses, you need an investment option which can give you good returns, or which can give you higher returns compared to other asset classes. That is equity. So, as an individual investor, you should not be biased against equity and then say, "All right, equity markets are risky, let me not put in money there." Right? So, if somebody asks you to invest in equity, "All right, why don't you invest in equity?" What comes to your mind? Two major challenges. The first one is equity markets are risky. And second one, I don't know which stock to buy, which stock to sell. Knowledge related issues, or it could be time related issue, right? These are the two major challenges when it comes to the matter of equity, right? So now let me put it across in a probably slightly different way. How is that we can manage these two challenges? Okay. Now, first one being, when you say how to reduce risk, very simple. Putting money in equity means you've invested money in a business. Okay. As an investor in a business, imagine your own business. You just started today. You think your business will be profitable in 3 months and you will sell that business and get out? Not possible, right? When you start, probably it might take 6 months to a year even to just understand how business works, because business world is totally different from the Excel plan what we make. Excel is only projection plan and everything based on multiple assumptions. When we go to market, all these assumptions gets tested. So it takes time. So as an individual involved in running or building a business, you would have told yourself, I will give time. How much time? Maybe 5 years or 6 years. That means what? Over a period of 5, 6 years, you would have built a stable business. Does it mean that the performance will be progressive, that every month, every year it keeps on increasing? No. Sometimes your business might be great, sometimes it might be bad. This up and down in business will always be there. You always give time, right? So it is like saying, how much return can we expect from equity? We say 12, 13% return. Is it guaranteed 12, 13% return every year? No. It is an average return what is expected. It is like saying Virat Kohli's batting average is 50 runs per match. Does it mean that he is scoring 50 runs in every match? No, right? I mean, some matches 10, 20, some matches 50, 100, whatever. That works out an average of 50. Same logic should apply for your equity markets as well. If you want to reduce risk in equity investing, it's very simple. Stay invested for long term. Do we call this as time diversification? The chart, what you see here on the screen, is the performance of equity markets right from the year 2006 to 2021. Every year, what has been the performance of, say, Nifty, like market? There are years you got 50%, 70%, 30% returns, which is phenomenal. But there are also years you've seen losses of 50%, 24%, 4%, and so on. But a long-term average, the average return, at least as per this example, it is working out to 12%. So, as an equity investor, remember the focus is on the word investor. You should have all the time and patience in the world to wait it out. Markets go down, don't panic. Markets go up, don't get too excited. Stay invested. That is all it is. Okay. The more you try to meddle with equity portfolio at regular intervals, the chances of you making mistakes go up. That's when you end up making losses and then you end up blaming the market. Right? So that's what you should ideally avoid. That's answering the first question. Equity markets are risky. Very simple. Stay invested for long term. Give time. Risk goes down. Okay. Next one. Next one is, I don't know which stock to buy, which stock to sell. What should we do? Very simple. Suppose if I don't know how to stitch cloth, what can I do? Two choices. One, I can go to YouTube. There are many videos which is actually teaching us how to stitch the cloth. So you spend enough time, resources, energy, and then watch the video. You do it yourself. You might or you might not like the result. Or the second choice is you go to a tailor and then give it to him or her. Probably she will get it stitched in no time, right? I mean, some money is involved. You have to pay money. So that means not all the work, just because we are capable of doing it, we should be doing it. Sometimes it's always good to take the help of experts. In terms of money management, those experts are whom we call them as mutual fund schemes. What are mutual funds? Suppose if all of you are my investors, what I would do, I would collect money from all of you, do thorough research, and invest your money in 40 to 50 different companies and create a portfolio for you. Primary advantage, your risk goes down drastically because your money is not invested in one or few set of stocks all alone or not in one single sector. It is generally spread out across. Risk goes down, plus whatever returns generated, that would be passed on to you as investors. That's how generally mutual funds works, as simple as that. Right now, again, within mutual funds, we have multiple types of mutual funds. What are some of the mutual funds you can always look at? Like we call them as equity mutual funds, where majority of the money gets invested in equity market, right? So even within equity mutual funds, what you can do is, there are many types of equity mutual funds. You as an investor, if you want to start your journey, you can start with a large cap fund or a flexi cap fund or an index fund. You can start with any of these, like let's say 3 funds. I'm not saying this company, this fund. Ideally, you can start with any of these, large cap fund or a mid cap fund or a large cap flexi cap fund. These are the funds you can always start with. Any idea, guys, according to you, what is large cap mutual fund would mean? What do they do with your money? Where do they invest your money? Can I see some responses in the chat, please? What are large cap funds? Where do they invest your money? Just take a guess. There's no negative marking. Now, when we say large cap mutual funds, whatever money they collect from us, they invest our money in top 100 companies of India. Not all top 100. Out of these top 100, they select 30 or 40 companies and then create a portfolio, which means you invest in any mutual fund company's large cap fund. Essentially, they have to invest your money in companies ranked from 1 to 100. Portfolio is built around that only. Essentially mean you are investing money indirectly or almost directly in the best of or the biggest 30 40 companies of India. As simple as that. What do you mean by flexi cap fund? Flexi cap fund would mean that the money is invested in combination of large cap companies, medium sized companies, and small sized companies. So that's how these fund portfolios are actually built. Okay, so you can start with these 2 funds, right? Large cap fund or a flexi cap fund. So many of you might be thinking, look, it's all fine, but I'm still a student. I don't know. Mutual funds are meant for people with lots of money. Where can I will worry about it when I get there. I don't think there's an opportunity here today. But I agree, people with a lot of money invest. But you as a student also, if you want to start saving small amount of money from your let's say from your pocket money, there is an opportunity, what we call them as option called as SIP, systematic investment plan. Many of you might have heard of it for sure. What is a systematic investment plan? How does it work? Very simple. You need to make 2 decisions. First one, how much you want to invest every month. You can start with as small as 500 100 rupees also. So this money will be deducted from your bank account, 100 rupees, right? That's the minimum amount. Then what happens? The second decision what you have to make is which mutual fund scheme to invest. ABC company, large cap fund. XYZ company, flexi cap fund. So you need to make that decision. So on the date you have decided every month, this money will be deducted from your bank account and it would be invested into the scheme of your choice. Every month it keeps on getting invested. This process of regular investing is what we call it as systematic investment plan. And the great scenario is when we look at systematic investment plan. Okay, I'm just going to show you a small, let's say the benefit of SIP and how it actually looks. For this, I've taken example of 3 best friends: Amar, Akbar, Anthony. Okay, Amar, Akbar, Anthony. If you see all 3 of them, they worked for 30 years. Like you guys just started working from this year, you worked for 30 years. But the way they looked at their life was different. Out of 30 years of career, Amar said, let me enjoy first 20 years. Last 10 years, I'll invest as much as possible. Okay, last 10 years. That's what Amar did. Every month, Amar invested 15,000 rupees. Okay, last 10 years, you have more money in hand. Amar invested 15,000. So total amount invested by Amar is 18 lakhs. So next guy is Akbar. If you see, Akbar invested for 20 years and he invested 7,500 rupees every month. And Akbar is also total investment of value is worth 18 lakhs. And if you see Anthony has invested for all 30 years, that is 360 months, 5,000 rupees every month. That works out to 18 lakhs. If you see, all three of them have invested same amount of money, right? And because they're best friends, they spoke to each other, and then they've invested in the same mutual fund scheme which has given them 12% return. Okay, I'm reiterating again, 12% is assumed. It is not guaranteed every year return what you get. There would be years you get great returns, there might be years you see losses. When you hold it for long term, it works out an average of 12%. So if you see, at the end of 10 years, Amar is almost getting 35 lakh rupees. Is that great? I would say it is fantastic. 18 lakhs invested, 15,000 rupees every month for 10 years, you're getting 35 lakhs. Is that great? I would say it is fantastic. Guys, my next question to all of you is, how much you think Akbar should get? Same 36, same 18 lakhs, same 12% return. How much you think Akbar should get at the end of 20 years? You want to take a guess, anyone? Anyone, just put a guess number. Same as Amar, more than Amar, less than Amar. What's your take? Okay, Navneet is saying more than 35 lakhs. Okay, Shubham is saying more than Amar. Let's see how much more than Amar. Akbar is getting almost 75 lakh rupees. It's not just more, it's more than double. Double works out to 70 lakhs. Akbar is almost getting 75 lakhs. So how much Anthony should get, guys? Now hopes have gone up. Miti, how much you think? How much you think Akbar, Anthony should be getting? Okay, Navneet is saying 3x. Like I said, it's a good guessing game, huh? Like there's no harm in guessing. Okay, Saksham is saying 1 crore or more. Okay, let's see. Shubham is saying 1.2 crores. Okay, let's see. Anthony is getting about 1.76 crores. So, guys, please don't get me wrong. I am not showing you a scheme on, okay, you invest in this scheme, you will become a crorepati. That is not the intent. The reason why I'm showing this example is very simple. If you want to create wealth in your life, the most essential ingredient is time. The longer you stay invested, better it is for wealth creation. Okay, that means even if you were to start with 500 or 1,000 rupees from today, it will help you in a bigger and much better way, rather than probably you will say, okay, let me start earning more, I'll invest more, only then it will make sense, right? Small money, small investments, and for long term, ideally help you, like let's say, in taking things a longer way. And finally, all you need to do is, when you start investing in SIPs, remember, would you be happy if your income is same every year for 10 years? No, right? You'd want your income also to grow by, say, 10% every year, or at least 10% every year minimum. If you, I'm sure your aspirations are bigger, you would want it to grow at a bigger rate, but I'm saying 10% minimum is what we expect on an average. That is an ideal target. What you also should keep, that your yearly, you should set a target. I'll increase my monthly SIP by, say, 10% or 15%. So when you keep on increasing it every year at 10% or 15%, the final corpus, what you get, the end corpus, would probably much bigger than having the same SIP amount. And you'd be surprised to see the kind of difference what you can make if you make a constant increase every year. Okay, so in a nutshell, what I'm just trying to say is, every individual should make use of equity. Okay, why equity? This equity will help you in building wealth in the long run. Don't expect any magic to happen in 6 months, 1 year. It will take time. It's like planting a seed and then watching it grow into a tree. It's a very boring process, nothing exciting. The only job is you need to water the plant during non-rainy season. That's it, right? So it's not a exciting process. In the same way, make your investment process as boring as possible. Make it boring, you will create wealth. Okay, that is what ideally you should always keep in mind. Do not have bias against equity and then say, okay, equity is not for me. It's essential for us to take such risks in equity as well. Okay, now finally, should we invest in gold? I think everybody should look at investing in gold, primarily because every time equity market goes down, gold prices go up. So when you add a gold to the portfolio, equity portfolio, the overall investment risk goes down. Okay, so essentially, how should you build your like as a portfolio? Very simple. For all your short-term goals, like something which you're intending to achieve within 3 years, your money should be in all debt. And for all your long-term goals, okay, you should look at building equity heavy portfolio, maybe 80% towards equity, and then another 15-20% towards gold and long-term debt. Okay, that's how you can always start. Okay, uh, just one more thing. So many of you might be thinking, okay, how do I start my investment journey into mutual funds? If you're looking at starting the mutual fund journey, just 1 minute. Yeah, I hope you can still see the screen. Okay, so how to start the journey into mutual funds? Very simple. Um, all of you, if you want to start, you need to have KYC. KYC is like having a passport. If you have passport, you can travel to any country with a valid visa, right? So if you do KYC, that means you submit your PAN or ID proof, address proof, photograph, and bank details. Your KYC gets completed with like the adequate KYC completed. Then you can start investing in mutual funds, any mutual fund of your choice, and you can start the journey, right? So that's how it works. And generally, SEBI has set up something called as scores, which is into grievance management. Any complaints against any market participant, you can always submit your complaint. SEBI will ensure it gets addressed within the stipulated time. Okay. So on that note, I would like to conclude my session. Let's probably open the floor for questions. Vidhi, can we take a few questions if there are any?
Yeah, sure. Please feel free to ask and post your questions on the chat box.
Anyone, any questions? Can I know what are quant funds that are trending? Okay, Navneet, quant is a mutual fund company. We call it as AMC, Asset Management Company. Why they're trending is like David versus Goliath story. Quant Fund House was a very, very small fund house before COVID. But if you see during especially 2020, 21, 22, the performance of their funds were like astronomical, right? Pick up their mid cap fund, small cap fund, even their liquid funds, they give phenomenally high returns. The difference between the best performing fund and the second performing best performing fund, that difference itself was quite huge. So that's why many young investors and then investors who are looking to go direct have been investing in quant, or they've been investing in quant. So that's just about it, right? But again, what I personally think is it's okay to invest in funds like this, but at the same time, what is also important is to not to put all money in one AMC only. So there also it's important for you to reduce your risk by diversifying. So put money in all other AMCs as well. I'm not saying all other, diversify. Maybe when you're picking up 4 or 5 funds, try to reduce your risk further. Uh, how to start with cryptography, Saksham. I mean, that's something I don't think we can address in this session. Maybe probably if and when we do session around cryptos, we can cover that later if that's okay with you. Okay. Shubham is asking during the session which type of funds we should invest into. Shubham, let me answer this question in two different steps. First one, as what happens is, as you and me, we are anticipating recession. We want to take decisions accordingly. But the challenge with equity markets is equity markets always looks at least 2 quarters ahead. So if you and me are thinking about recession, then probably equity markets have already reacted to that recession, and then markets would have already gone down or have been remaining volatile. When you actually get to hear the news of recession, you might see markets going up. So it's kind of difficult to really time the market to an extent. Key, okay, now this is expected to happen. What should I do? Okay, but having said that, during recessionary scenario, okay, generally large cap as a category tends to outperform mid and small cap. Recession means equity market should go down. We saw that in 2022 already, right? That's why if you see in 2022, mid and small cap stocks had seen bigger amount of losses compared to large cap. So that's why many investors would actually move towards large cap. That is one. Again, what kind of sectors one could look into, right? I mean, in recessionary scenario, for sure, there's a recession going on. Generally, defensive sectors tend to do well. What are defensive sectors? Pharma, FMCG, utilities. These are some defensive sectors. They tend to perform well. So you could always look at reading it and then probably take those decisions. And good part is, since you're young, you're starting, even mistakes what you might end up committing might not have a big, far-reaching impact on your corpus. It's okay to make those mistakes now and then learn it when the money involved is small, rather than doing these mistakes when you're 40 or 50, where you put in all your life savings and then losing that money. Okay. SEBI is planning to allow mutual funds with performance-based fees. What's your advice on the same? Ankita, here, once SEBI comes out with a regulation, your and my opinion, I don't think it would really matter. So there is a white paper around expenses, how much they can charge and what this thing. I'm sure in the coming months we will see the changes. Which mutual fund SIP is best to start in 2023? IT, pharma, flexi cap, or multi asset? Um, I mean, please don't take it as recommendation, because in a session like this, it's very difficult to give recommendation that okay, this is what ideally you should start with. Okay, but from the general context, investing in one single sector is always very risky. Like investing in IT or pharma, like taking sectoral calls are generally risky because a particular sector might not do well all the times. Look at your IT as an example, right? I mean, IT did exceptionally well in 2020 and 21, but 22 it was the worst performing sector, right? People who would have invested in IT by looking at the performance in 2021 probably would be regretting in 22. So performance of sectors changes based on the economic cycle, right? Recession, economic recovery, and so on. So that keeps on changing. So essentially, these are very cyclical or seasonal in terms of performances. So then what are some of the all season funds? Suppose you want to start your mutual fund journey, then maybe a flexi cap could be a good start. Multi-asset is again a good start, because multi-asset gives you combination of all asset classes in one portfolio. And good part is equity heavy, small allocation to debt, and gold as well as silver. So you would get to have all in the platter. It's like having a buffet. If you don't know what to choose, like what dish to choose in that restaurant, the best way is to go for the buffet, and then you get everything in one plate. So you could probably start with both a flexi cap fund and a multi-asset fund. Both are fine. But one good thing is, since like I mentioned already, since all of you are young, it's okay to take little extra risk. You can always be equity heavy, because large number of your goals would be for long term. Okay, I hope that answers your question, Ankita.
Karthik, should we take this last question or should we stop here because we are running short of time as well?
We can take this one last question if you're okay.
Sure, sure. Let's take this one last question and yeah.
So, how can one make regular income like dividends from mutual funds, sir? Navneet, for someone to make regular income from mutual funds, ideally you should have built a bigger corpus. Without big corpus, it generally doesn't make sense. At the same time, if somebody is looking at regular income, I would suggest instead of looking at say dividends, you can always go for SWP, systematic withdrawal plan. SWP is more tax efficient and it's more visible in the sense you can decide what kind of cash flow you want and so on. So, to answer your question, how can you make? So, first you build it in the sense you are like 21, 22. Take that aim that okay, next 25 years I'll build say 10 crores. So, build it first and then go for SWP, systematic withdrawal plan. I mean, considering the current scenario, hoping that same thing will remain in the years to come. Go for SWP, it's more tax efficient.
Thank you so much, Karthik, for the insightful session, and it was really amazing and educational as well. And I hope that the students at UPS had, got to learn a lot about from this session. And so let's move ahead. And we also had a very insightful Q&A session. Thank you, audience, for keeping the session engaging. Uh, so moving ahead, we have something exciting coming for you. So why should we stop at one speaker when we have when we can have two speakers? We have with us our CEO of Bullsmart, Ankita Das, who will share her insights about how she started the Bullsmart business and what is Bullsmart all about. And without any further ado, Ankita, the floor is yours. Please.
Thank you so much, Vidhi, for such a nice introduction, and thank you so much, Karthik, for a very insightful session with a lot of explanation. I think hopefully all the college students have loved it, and sure, just want to make it a very frank one. So last two questions were mine. So hope you didn't mind, and because I wanted, the other students also to know about the same. So yeah, so hopefully everyone is doing good, right? I want to hear some voices, guys. Why you all are so quiet? You all are so young, so beautiful, handsome people. Why you guys are so silent? Let's hear it out. Like, just tell us that how did you like our session? Hmm? Still no one is ready to tell. Anyone?
Probably, Ankita, they are tired of after the full day of classes, and yeah, the session was really. I mean, it was indeed insightful. And as an MBA student, if like I
Hmm.
heard what Kartik said and all of those things, I mean, this is a very different aspect because it is from the industry directly, right? So even when we are, in college and when we are starting our investment journey, we do not know these aspects of investment. And I think that uh, I mean, the program will obviously help our, students that have joined today.
Sure. So that's what I wanted to hear. So uh, let me give you a very quick introduction about Bullsmart. So Bullsmart is a investment platform which we have put up or startup just to help youngsters like you through our cutting edge financial tools and brilliant investment ideas and wealth growth opportunities. So guys, I will also tell you one story of mine, like how I have started this company and what is my vision and mission. So I was also a college student like you, and to be very frank, I was also scared of the investment. Right when I was doing my graduation, and even when I was doing my MBA, also when there is a lot of people who used to give CFA, and we also had one subject name as securities market. So at that time also, whenever someone used to come to teach us about the investment and securities, I was like, uh, this is so dull. I mean, it is not very much attractive, and I was also very much scared, like, how it will benefit me. I am not going to do it anymore. I actually used to hate investment subject a lot. Trust me. And suddenly I have to, do my internship while I was doing my MBA, and that is when, investment became my friend, because I started my internship in Reliance Capital. And when I saw that, at that time, dealers were also there. They used to, call the users, and then I used to see that whenever people have, invested 10 rupees, within a second they are getting, 10,000 or something like that. So it excited me, like, what is this? I also want to learn it, like, this put option, call option, what are this? So I also wanted to learn that how to do investment. And since there I have started my, investment journey. I started with a very small amount of rupees 500, and that too in gold SIP. I still remember that. And after that I have never, looked back. So, for youngsters like you all, it is very important to understand at the very beginning, like, if we want to be financial stable in our future, we have to start from now itself. Start making, start doing small investment. It is not necessary that, you have to invest a lakh or 10,000 or 20,000. There is no such cap. Even you can start with rupees 100 as well. I think Karthik has already explained you guys that, it is not necessary. And he has very much, clearly explained, like, if you start early, your returns would be much better. You would be able to, be financially stable. And why to start from college itself? Because, uh, there are very, I mean, too many financial goals which we want to achieve, right? Someone would like to buy an iPhone, someone will like to buy a car at later stage, house at later stage, anything, or for travel also. But until we get, employed, people think that we cannot invest, which is a wrong stigma. We can even invest, and, keep on adding money for our investment, so that at the end we can get good returns. And with those good returns, definitely I would be able to achieve my financial goal. So that is what in Bullsmart we are focusing at. Our main mission is to, help more people enjoy our investment platform in a convenient and transparent way, wherein you'll get a lot of opportunities to learn, as well as to, grow your financial knowledge. Not only knowledge, but it will give you such a good AI based financial decision making tool, that it will make your life easy when you are going to invest. And our vision is to, make a platform wherein you'll get each and everything under one roof. So that is what we are currently focusing at. And we always encourage the young crowd to, participate in it. Try to learn more as much as you can, and always try to, start with little amount. That will also do. And start learning about the stock market, start learning about mutual funds. Don't get scared with that, because, some or other day, definitely you are going to, earn, and definitely you are going to, stable your financial securities, right? So why not to start it from today? So if you are ready to start investing, and if you are ready to build your wealth, it is the time, guys, where you can take advantage of these kind of session and start learning about the process. And definitely we also have, news. We also have forums where we keep on putting the insights about the, stock market, which will keep you always updated. So definitely you can try for that. So yeah, that's it what I wanted to say, and thank you all for attending such a great session, and thank you so much, Karthik, once again for the insightful session.
Thank you so much, Ankita, for sharing your experience and your insights on investment, and that was really enriching. And I hope that the students would have, got some inspiration to start their investment journey, listening to your words. As we are coming to the end of this session, before we end, I hope that you all enjoyed and had an exciting session today. And we will also be conducting a campus manager hiring session with UPS, and the details of the hiring will be shared to UPS CSI mail IDs, and Sparsh and all will be taking it forward. So the details will be shared in the mail, and those who all are interested, they can to get the experience of the corporate world, you can apply for the role. So there are a lot of perks as well attached to the campus manager role, wherein there is a perk of stipend as well, for per month fixed stipend. And so, yeah, that's all, everybody. So with this, we come to the end of the session. And I thank once again Mr. Karthik and Ankita for being with us today. And I would also like to thank the organizing committee of UPES and the committee at our team at Bullsmart for conducting this event. And we wish to have more sessions with you all, same sessions. And yeah, guys, thank you so much. You all may drop off, and thank you for being a great audience. Thank you so much.